London AIM-listed Alien Metals has updated investors recently with details of its iron ore development study at the company's Hancock iron ore project in Western Australia. The non-exec chairman is Alwyn Vorster. He joins us now on the line from Perth. Alwyn, great to be able to catch up with you. Lots of news recently at the project. In just a few moments' time, I want to take a look at the context in which Alien Metals is existing, because it's an exciting area of the market. But let me just quickly give you a bit of a platform to discuss the news you've seen recently and what's going on, because, as I said, a lot of developments have happened.
Yeah, thank you, Jeremy. It's a pleasure to be here with you. I would like to bring across to the audience 4 key points today. It's the right industry that we are in. Iron ore is a very healthy commodity and has been for the last few years. We are in the right location. This is absolute elephant country for iron ore developers. And the Hancock project has a very solid development story with significant upside as well. Those are the 4 key points I think I want to bring across.
Well, let's talk about the development project as it stands at the moment, because, as you say, the context is great. But give us some more depth of what it is you've been doing recently, which might give investors some sort of cause for enjoyment.
Yes, the Hancock project development study has been in the making for about 5-6 months. Since I joined in August last year, we've been working on it. It's bordering on a full DFS, what we call in the industry, a definitive feasibility study. Minor elements of it that's probably still at a PFS level, so that's why we called it a development study. It basically entails the mining from this ore body of about 1.2 to 1.5 million tons per year of high-grade iron ore, road transporting it to the port of Port Hedland, and selling the iron ore to most likely a market in China. So that is the supply chain. It's good quality ore. The prices are healthy. There's significant upside that we see in the project.
Talk to us as well about the context, because, as you say, robust market conditions at the moment. In fact, let me just bring up a chart for iron ore, which you will be very familiar with. And in fact, we've seen recent highs in the level of iron ore prices not seen since the middle of 2021. First of all, what is it that's driving the price? Because clearly, you mentioned China, I mean, obviously, but we know that China as well, at the moment at least, is in the doldrums, relatively speaking, in terms of economic performance.
General economic performance, yes, I have to agree with you. We do not see the lag in the steel industry. We see healthy steel prices. The hot rolled coil price is still very healthy. We see the long steel products used in construction very healthy. And there is still, although the economic growth is slower than normal, it is still 3, 4, 5% in China. Off a very high base. So I think that's the one element that's kept the iron ore industry healthy. The other very important point, Jeremy, is that iron ore, for the electrification of the world, iron ore is needed 20 times more than all the other commodities, all the other mining commodities combined. So every single product to do with electrification, low carbon environment, requires significant iron ore and in effect then steel in the end. High quality steel requires high quality iron ore, and that is what this Hancock project can contribute to. Yeah.
How far down the road within the Hancock project are you? And tell us a bit more about the next plans, because clearly it's a lot of money to take a mine through to production. And some time as well. Where are you along that road? You've explained the fact you're at the DFS stage, but what's that in terms of the context of your next work which needs to be undertaken?
Yeah, I think, the interesting context is I've been involved in iron ore most of my career. I started it in South Africa in the 90s, then moved to Australia, and have been part of many small and large iron ore developments. It normally takes about 10 years from the first drill hole to the first ore on the ship. In the case of this Hancock project, it's a much smaller project. but it will be a very, very quick turnaround from first drill holes a couple of years ago to hopefully first ore on ship later this year. Basically, all the studies done, the contractors negotiations have been done. We are waiting on the final environmental approval, which follows the mining lease approval in the next 2-3 months. So we hope by June this year, the project will be fully permitted. Construction can commence in July, August, about a 5 months development period with the first ore on truck by December 2024. So that is the pathway to first ore on ship this year.
And how strong is the balance sheet to cope with the demands that are going to be placed on the company for getting you to that point? I mean, clearly, a company of the size of Alien Metals, you're going to need quite a bit of firepower to get you up and running.
That is very true, Jeremy. The bigger projects like the Rio Tintos and BHPs of the world, when they develop these larger iron ore projects, we are talking about $2-3 billion Aussie dollars of capital needed to develop this. In the case of the smaller deposit, in the right location that we have, we are talking 20 to 30 million Aussie dollars. So it is absolutely chalk and cheese. Yes, we are a small company. We don't have deep pockets, but it is a very low capital cost development, which often admittedly mean your operating cost is slightly higher because you don't have a railway line that you can operate at a low cost, etc. So we will have to use road transport, which is often far more expensive than rail transport. But be it as it may, we believe that an all-in US dollar cost of about 80, you can be very profitable for most of the cycle from these smaller deposits. As long as the US headline iron ore price is above $80 to $90, then the Hancock project can make really good money for the investors.
Do you see yourself as a takeover target? Let me bring up the share price chart in the context of what we've just seen for the iron ore price. Alien Metals has not followed the underlying commodity price. Yes, you're not producing just at the moment, but there is a clear visibility on your schedule to undertake production at some point later on, and not too long away, as you say. It's a speedy project. But this must be a disappointment to you. But I think more importantly than that is, does this low price not make you concerned about a potential takeover of the company? I ask this in the context of China, because China quite often likes to own vertically integrated projects that it can rely on to supply its, in this case, iron ore. And iron ore, of course, is something, as you say, that China is in desperate need of. Are you a takeover target? Do you see you being able to sustain the business right the way through to production, or are you actively looking for some sort of joint partnership deals?
No, I wouldn't say that we would be, as a board, looking for a takeover, but certainly very open-minded about joint venture type structures. There are quite a few interested parties in Western Australia talking with us about a joint development. Some of them already have operations. Others are desperate to get into operations. And all of them know how hard and difficult it is to actually get some of these deposits permitted, studied, contracted, and doing export. So I think, Jeremy, we are remaining open-minded about cooperation with other companies. The share price normally is there's a strong correlation with the iron ore price. It's the quality of your asset, the market, and then the stability of the management team, which I have to confess, in the case of Alien, has not been stable. There have been many changes at the board and the management level over the last year or so. As companies evolve, there are always changes, associated with the different phases of the development. We hope that soon that can all be stabilized, that there's a clear team that the market can associate with and the market can trust to take the company forward, which will be reflected then in the share price.
At current levels, what is being priced in then? Because you paint a rosy picture of the environment in which you're trading or going to be trading. You suggest that things are cooking really nicely for production sooner rather than later. Why is there this tentativity around the share price, and what do you think the share price should be given the current context?
If I look at the Hancock development study results that we have released last week, we are talking about a conservative estimate, $20 to $30 million Aussie EBITDA per annum. In the commodity game, and specifically iron ore companies, most often they would trade at 5 to 10 times EBITDA, annual EBITDA. So you could argue that a benchmark peer group market cap for this company would be 200 to 300 million Aussie, whereas at the moment we are probably at 20 to 30 million, market cap Aussie. So there's, in theory at least, there's a 10 bagger opportunity here if the company develops the project along the lines of the development study and there is stability in the company with board and management.
And of course, the other aspect of this, I understand from what I've been told, that there are exploration potentials as well for further expansion. Is that right?
Absolutely. So the numbers I have been quoting are based on the existing resources. I believe personally that there is significant upside on the resources. We have only explored about 5% of the tenement areas, and there are major targets that we have not been able to access due to constraints that we had in the past that are now removed. So I believe in the next 6 months, with the right funding structure, that we can actually do very serious exploration and get the resources up to 20 or 30 million tons. That will then in turn lead to higher production rates per annum, longer mine life, better economics. Scale always, play a big part in these bulk commodities. So great upside potential in the company.
Yeah, okay, so you've given us some detail about your exploration side. What about the main project? Just quickly bring us up to speed and a quick trip round the next steps, if you like, and what's in your intro.
Next steps are clearly the last of the permits that I've been talking about. We hope that it is largely procedural to secure the mining lease. Following the mining lease, there's the ground clearance permits, which again, if all the right steps are taken, must be procedural. Contracting construction by July, August. And then, as I said, by the end of the year, there could be operations, from the project. So cash flow, Q1 2025, most probably.
Yeah. Look, it's a pleasure. We'll have to leave it there, but thanks indeed for joining us, and we look forward to hearing more about the project as you go towards the production later on. Alwyn Vorster, in the meantime, thanks indeed for joining us. That's Alwyn Vorster. Alwyn Vorster is the non-exec chairman of Alien Metals, ticker symbol UFO on the London AIM market.